Hello friends, in the series on income tax cases, today we will discuss a case which was before Honorable Delhi High Court, and the issue before the Honorable Delhi High Court was that if an assessee company receives some loan from its director and it is the allegation of the assessing officer that the unsecured loan has been given by the director of the company against his OD limit, against FDR, and that FDR has been made by the director by depositing cash. So whether in that case, when the case is relatable to the assessment year 15-16, so whether in that case the assessing officer was justified to examine the source of source, or if the director has deposited the cash for making the FDRs, so whether in that case that aspect is to be examined in the case of the assessee company or the director. This issue has been taken up by the court in the case of Sheila Overseas Private Limited versus Principal Commissioner of Income Tax and another, and this case is reported in 484 ITR at page number 486. The date of the judgment is 28th May 2025. In the present case, the assessee is in the business of ready-made garments and leather goods. The case relates to the assessment year 15-16. The assessment of the assessee was going on, and when the assessment was going on, the assessing officer observed that the assessee has taken unsecured loans from two directors, one RCB and one HB. In respect of Director HB, the assessing officer made an addition of rupees 51 lakh for the unsecured loan from the Director HB on the allegation that when the notice or when the summons under section 131 was issued to the director, that director didn't appear. Apart from that, the assessing officer was of the view that the assessee is not able to satisfy the three limbs of section 68, that is identity, creditworthiness and genuineness of the transaction, and made the addition. When the matter was before the CIT appeal asked for a remand report from the assessing officer, and in the remand report the assessing officer alleged that the FDRs against which the OD has been taken by the director, that FDRs have been made by the director by depositing the cash into his bank account, and accordingly by taking the same ground the CIT appeal confirmed the assessment order, and which was reconfirmed by the tribunal also. When the matter was before the Honorable Delhi High Court, the court said that in the present case the assessee was not required to prove the source of the source, and the assessing officer while making the assessment was trying to examine the source of the source. Since in the present case the transaction was of unsecured loan and the assessing officer has the power to examine the source of the source only with effect from 1st April 2023, so the assessing officer was not justified to examine the source of the source. Before that, that is from 1st April 2023, only in respect of share application money, share capital and share premium, the source of source can be examined, or any other amount which is of the nature of share application, share capital or share premium. The court said that in the present case the assessee is rightly justified in establishing the identity, creditworthiness and genuineness of the transaction, and all the transactions are through banking channels. The court said that in the present case the director is not a stranger and he is vitally interested into the affairs of the company. The court said that if the assessing officer was not justified, if the assessing officer was not satisfied with the cash deposit by the director of the company to make the FDR, then in that case it was the duty of the assessing officer to reopen the assessment of the director and then make the addition in the hands of the director and not in the hands of the company. The court also said that the assessee has given the explanation that even the director of the company, that is HB, who has given unsecured loan to the company, was having a cash balance of rupees 26.50 lakhs in his hands to justify the cash deposit into the bank account before making the FDR and before taking the overdraft facility against that FDR. The court said that the assessee has very vehemently disputed that the OD was paid by cash deposit, and the court examined that in the present case even the OD was settled through the banking channels. So the court said that in the present case the tribunal has totally misdirected itself in reconfirming the addition under section 68 for the loans taken by the company from its director HB. At the end of this video, once again, I am repeating the name of the case. The name of the case is Sheila Overseas Private Limited versus Principal Commissioner of Income Tax and another. And this case is reported in 484 ITR at page number 486. And the date of the judgment is 28th May 2025. Thank you, friends.